We're at the start of a new month. Today, I'm coming to you with an update on my dividends received for the month of May. Now, this video is about my dividends received in my taxable accounts. I have accounts for different reasons. I have different goals when it comes to my investments. So, be on the lookout soon for some updates on my retirement accounts. But today is just an update on my dividend paying investments that hit my portfolios over on Webull as well as Moomoo. So, what are dividends? Those are those little thank you payments that companies give you for just owning their stock. Some pay quarterly, some pay monthly, but either way, I'll take it. And turn on the drip, the dividend reinvestment plan, in order to reinvest my dividends and use that money to also build up my positions. I'm Lisa J. Stocks. If you're not already, subscribe, like, and hit that notification bell so you can keep up with all of my videos and live streams. All right, so I have 3 monthly paying dividend investments in my portfolio, and they are Realty Income, Main Street Capital, and SPHD. So those are always a part of my update. And this month, I also had one of my tech stocks pay out a dividend. So my portfolio is nothing fancy, just solid companies that continually pay out steady dividends, money that I don't have to trade my time for, a way of gaining passive income. So let's start off with that tech stock that paid out this month. And Warren Buffett once called it one of his best investments, and for good reason. He bought into this company back in 2016 when the stock was undervalued, and it's Apple, which has become a significant portion of Berkshire Hathaway's portfolio. Out of the 3 stocks that make up 48% of the portfolio, Apple stock is 22% of that. Even after selling some of their shares last year in 2024, Apple is still a significant portion. And when we think of Apple, one of the first things that might come to mind is the iPhone. But that's just the beginning. When you have an iPhone, you most likely will be pulled into the ecosystem of Apple. You get the phone, then you have the AirPods and the iPad and the Apple Watch, the MacBook, all of these different things. And it doesn't just stop there. You have Apple Music, iCloud, and then their service businesses, subscriptions like the App Store and Apple Pay, which alone are bringing in $100 billion a year. So Apple is a company that is profitable and able to give back some money to their investors through dividends and buybacks, buying back their own shares in order to boost their share value. Now, year to date, Apple stock is down about 18%. Like many of the stock in the tech sector in that Mag 7, they have had some struggles due to integrating AI into its products in a meaningful way, as well as supply chain issues potentially with China. But when it comes to Apple, they are profitable, as I said, and I'm going to be holding on to my shares and reinvesting my dividends long term because I think in time, this company will reward me for holding on to my shares. Next, let's take a look at Main Street Capital, ticker symbol MAIN. And this is a business development company, a BDC, and another consistent dividend payer. They lend money out to small and mid-sized businesses, typically ones that bring in about $10 to $150 million in revenue. And their structure deals with floating interest rates. So when the Fed raises rates, Main Street's loans go up, their income goes up related to that. Plus, they manage everything in-house, which means they're able to keep more of the profits for the shareholders. No management fees eating away at the shareholders' returns. And they also pay a bonus dividend a few times a year. Main Street Capital is up over 60% over the last 5 years. Year to date, it's up 15.73%. So another investment that I'm happily holding on to and reinvesting my dividends. Now, on to Realty Income, which is known as the monthly dividend paying company. They are a REIT, a real estate investment trust, and they are focused on high quality commercial real estate and steadily increasing their dividends for over 120 times since listing. Now, on this one, I'm not adding any more shares right now. I have over 100. So I'm focusing on building up my other positions. just holding and reinvesting my dividends. As I said, Realty Income is known as the monthly paying dividend company. And sometimes I have to remind myself that you have to put in the work to find a balance between share appreciation and steady dividends. Now, looking out over the last 5 years, Realty Income is down 7.12%. Some issues that they have been facing related to their stock price are high interest rates, investors going with other type of investments, offering higher yields, stock dilution, the company issuing shares, reducing the value of the existing ones, as well as market uncertainty, concerns about commercial real estate, which may have kept investors cautious into focusing on investing into this company. But even with those factors related to the stock price, it is still highlighted as a stock to buy for those consistent monthly dividends. In this article right here, 3 cash cow monthly paying dividend stocks to buy and forget. Both Realty Income and Main Street Capital are highlighted, as well as Stag, which is a industrial REIT that pays monthly dividends also. And I also wanted to highlight 5 key reasons why Realty Income is something to consider holding on to as a part of your dividend portfolio. They've maintained consistent performance over time. Their tenant base is well diversified across different sectors. They have a strong acquisition pipeline aimed at fueling growth, and their financial strategy ensures stability. And of course, they are committed to that reliable monthly payout. And last company is SPHD, and that is Invesco's S&P 500 high dividend, low volatility ETF, exchange traded fund. This ETF selects companies from the S&P 500 that have a high dividend yield and low price swings for steady monthly income, thanks to its focus on those reliable dividend payers. The top sectors are heavily into real estate, utilities, consumer staples, as well as exposure to other areas like energy, healthcare, and financial. And year to date, this investment is up 5.31%. So here's a look at my dividends received for the month of May. As I said at the beginning of the video, in my taxable accounts, we have a total of $61.29 received from these companies. When it comes to my share size, Main Street Capital, I currently have about 40 shares, Realty Income on Moomoo, 109 shares, SPHD, 38 shares, close to 39. Apple, I have 59 shares, and an additional 4 shares of Realty Income over on Webull. So my dividends are higher on the quarter because I have the additional tech stocks as well as ETFs like VTI and VOO that pay on that schedule. But here's a look at my year-to-date dividends received. I'm at $372.51, with my highest dividend coming from Realty Income. And out of my 3 monthly paying dividend focused investment, Main Street Capital continues to be the leader when it comes to my stock performance. I'm up 33.15%. So this is just one portion of my investing strategy, something that I'm incorporating, continuing to invest into these companies in order to build up my share size as well as that dividend income. Let me know in the comments, are you holding any of these companies in your portfolio? What was your highest paying dividend in the month of May? Are you reinvesting those dividends back into the same company, cashing out, or using certain dividends to reinvest into a different company in your portfolio? Make sure to drop me a comment. I hope you enjoyed this quick update. Don't forget to subscribe, like, hit that notification bell, check out my referral links, and I will be coming to you with more videos soon. Thanks for watching. Okay, bye.